Good afternoon and welcome everyone to our webinar this week, which we are going to be talking about some of the loan options which are available to startups, scale-ups and SMEs more generally. First of all, I hope you've had a good week and are looking forward to the weekend. Those of you that might be homeschooling might be looking forward to it a little bit more than others. I know we are in our household. The topic for today, what we've first of all, we've had another week, another scheme introduced by the UK government to support SMEs, which is the Bounce Back Loan Scheme, which we at Ignition think could be a real game changer in terms of supporting SMEs with liquidity and cash flow at this time. It's really aimed at micro entities, and that got us thinking, and what I've also observed generally from other webinars with entrepreneurs and small business owners is that there's still quite a lot of confusion as to these different loan schemes, which might be right for their type of business and how to go about getting the funding. So I'm delighted today that we are joined by Dave Lehman from Outset Finance, who is an expert or specialist in the government startup loan scheme. We're also joined by Sally Johnson from our sister firm Ignition Law, who has very quickly in the last week since its announcement got up to speed with the Future Fund, which I know is of interest to a lot of companies which have taken on equity investment from angels and venture capital firms in the past. And Andrew Moon from Swoop. Swoop are a partner of Ignition, and they have access, or they've created a platform whereby you can almost review the entire market in terms of products available, debt products available to SMEs. And we set up a partnership with them back end of last year, and it's been quite important in helping some of our clients investigate and access things like the Coronavirus Business Interruption Loan Scheme, or CBILS, as you can see on the screen. The format for today is each of our guests will talk very briefly, a little bit of background on the scheme, what it is, who it's for, and how do you apply for those kinds of things. And then we'll open up to questions, and we're particularly keen to hear from anyone who's had experience applying for any of these loans, good, bad, indifferent. If you do have a question, perhaps you could raise your hand or you could type it in the Q&A box. We have one poll which I was going to flash up. There we go. And if you wouldn't mind answering this, I am most likely to apply for, and there are the loan option schemes, and you can say none of the above or not sure as well. Okay, so without further ado, I'm going to hand over to Dave. Dave, perhaps you could tell us a little bit about the startup loan scheme.
Hello, Adam. Thanks very much indeed. Well, I'm Dave Lehman. I work for Outset Finance, and we're one of the providers of the Government Startup Loans Initiative. To give you a bit of history, Startup Loans is managed by the British Business Bank. Began back in 2012, and to date has provided loans to 63,000 entrepreneurs. It's available for pre-start businesses and early stage businesses where they struggle to get access to funding from a conventional source. With regards to the loan product itself, it's quite simple. It is effectively a personal loan for business purposes, so it's unsecured. The maximum amount to borrow is 25,000 per individual. There are no fees involved. The loan term is up to 5 years, and the interest rate is fixed at 6%.
Great. And Dave, in terms of how long has this scheme been running, and what's the process like at the moment for?
So as I said, the scheme's been running since 2012, so 8 years. So it's quite advanced now. With regards to the process, it's all driven by an online application. Pretty simple. Applicants go to the main Startup Loans website, so it's www.startuploans.co.uk. Register an interest, and from there then asked in the second stage to put in some personal details, which evolves into a credit check that's to confirm this, the applicant's eligible.
Yep. And
the final part of the online process is to upload some key business documents, so a business plan, some financial forecasts. And then after that, one of the advisors will be in touch to talk about the business idea and how it can be funded.
Okay, brilliant. Thanks very much, Dave. Right, so if we could move on to the Future Fund, and Sally, perhaps you could give us an overview of this fund, who it's for and how it works, and etc.
Thanks, Adam. Hi everyone, I'm Sally and I'm a corporate lawyer working primarily with startup and scale-up businesses. So the Future Fund. So the government has announced that it's making available a pot of £250 million for this scheme, which is yet to open, but they have said May, so any day we should get more details. And it'll initially run to September 2020. Under the scheme, the government will issue loans which will convert into equity from £125,000 up to £5 million, crucially provided that this amount is matched by separate third-party investors. Then there are various conversion mechanics as to how it will convert, but essentially it will automatically convert to equity at a minimum 20% discount, more if more is agreed with the third-party investors, at the next fundraise, if the fundraise is at least equal to the bridge funding amount. There's an option to convert to equity at a minimum 20% discount on the next fundraise if the fundraise is less than the bridge funding amount. And then on a sale or IPO or maturity, the loan will either convert at the discounted rate to the price set by the most recent round, or be repaid at a 100% premium, which is quite high, but it's a long term, this loan. It's up to 36 months, as it says on the slide. And on that last point, if the latest round was before the bridge financing, then there will be no discount. So in terms of eligibility, it's aimed at unlisted UK registered companies who have raised at least £250,000 in aggregate from private third-party investors in previous funding rounds in the last 5 years. They also need to have a substantive economic presence in the UK. And if you're considering a business which is part of a corporate group, it's only the ultimate parent, if that company is UK registered, who's eligible to receive the loan. Now, in terms of how easy it is to apply for, we don't know yet. So the government sort of announced it and put out a term sheet, of which I've just mentioned a few of the terms, but they've said that more detail will follow on all of the terms and eligibility. So we're very much watching this space at the moment to find out how it'll work. And we don't know at the moment if the government will produce standard form legal documents that there won't be much wiggle room on or room for negotiation, or whether they'll just issue the term sheet and it'll be up to law firms like us to kind of put together the drafts that will then go to the government for review. So we're sort of eagerly awaiting that information at the moment.
Thank you very much, Sally. I'd like to bring in Andrew Moon now. Andrew's going to give an overview of the Bounce Back Loan Scheme, which is 1 week. Actually, it's not even 1 week in its infancy. So I imagine there's going to be a fair amount of we're waiting to see on Monday. But Andrew, if you could tell us a little bit about the Bounce Back loans and also the CBILS scheme. You're on mute, by the way.
Mute everybody. Okay.
There we go.
I think the correct thing to say is watch this space. No one really knows exactly what format this is going to take on Monday morning in terms of the process. There's a woman in our team called Kat who's been working with all of the different schemes more or less around the clock for the last 3 weeks. And I sent her a message this morning saying, do we know what the application is going to look like yet, basically saying this is what the scheme does. So we don't know yet how everything's going to be. What we do know is what it says on the screen here, is that it's a small micro loan up to £50,000. There's 100% that's guaranteed, and there's no repayments for the first 12 months. Criteria bit, okay, is quite straightforward, apart from the where it says that the company was not undertaking in difficulty on the 31st of December. We don't know exactly what that means yet. Adam, as an accountant, might well give his tuppence worth, but we've looked on HMRC's website to what they're saying about companies that are struggling. We've got a definition, and we're assuming it's going to be that, and we put that into our system to believe that's the case, but we don't know yet until Monday. What we believe is going to be a 2-page application form. Should be really quite straightforward. We've been promised it's going to be a really fast turnover, and money should be available within 24 hours. A question that I've been asked, which is, can somebody apply for bounce back and CBILS? The answer is no, you can have one or the other, but you can move from bounce back through to CBILS. So you can, somebody can be going, help, emergency, apply now for bounce back. CBILS comes through and replace one with the other. Okay, I'm just going to type now for Stuart saying next page, so that I can now talk about CBILS. I think you've probably now all read enough in the papers to know roughly how this works. We've had a fair degree of confusion. We've had a lot of companies who got in touch saying, I fancy getting a bit of cheap money, can I have it? Yep. So 80% is backed, as you know, by the government. If it's a loan of more than £250,000, yep, anything that's above 250, it's 20% you'd need to come up with a PG. So let's do simple maths. Somebody's applied for 350,000, because that's really easy maths. The first 250, no personal guarantees. The extra 100, they need to give 20% of that. So that would be 20% PG for 20% of 100 grand, which is 20 grand PG. Okay. What it doesn't cover is companies that are struggling. So there's going to be people who are going to be applying who are going to find difficulty getting with the money coming through. Again, as you're probably aware, there's no interest payments for the first 12 months. As far as we're aware from the people we've got through so far, you're going to be able to look to move this on to something else should it make sense at a future date. Stuart, do you mind jumping onto my third slide? Okay, so trading for at least 12 months. It has to be, there are criteria for the types of activities that are acceptable. Things that they're less keen on are property related businesses. There's a question to do with shareholding, which has come up a couple of times. When people have had questions with that, I've got the debt team to specifically go through with them to work out if somebody can play around with their shareholding, whether they're going to be viable or not to get the money. What's needed, 12 months cash flow, year-to-date management accounts, last 3 years accounts if available, and there needs to be a business overview, which is basically if I am a lender and I'm a bank, why should I want to help this company? What we've found so far is a lot of people have thrown stuff at the banks, haven't put a full case in, and by not putting a full case in, they've found they've been pushed to the bottom of the queue. So if you're submitting to your own bank, make sure you've got the full pack and make sure you've had somebody who's validated that business overview so it makes sense and it's in a readable format. So the person who's receiving it can go, yep, tick, 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 that all makes perfect sense. Okay, that's hopefully answered that. And we're now going to jump back to questions and answers. Is that the next bit?
Yes, that's correct. Thank you very much, Sally, David, and Andrew for that. And we've had some questions come in, so I think we'll go straight into the questions. But actually, one thing before we do go on, if any of these schemes are of interest, well, I think you know us at Ignition Financial, but just do drop us a line. I'm very happy to connect you with David or Andrew. It's important to note that Outset Finance and Swoop do not charge for their services. They are paid by the lenders or the government. So, and they do take a lot of the heavy lifting off your plate, and they can, in the case of Swoop, rather than going direct, they can look at the whole entire market and see if they can find you a better deal. Sally, I think first question for you.
I've seen the first three questions, actually. I will have a go at answering these. So the first one, so Marja, apologies if I'm saying your name incorrectly. When it has to be matched, does it need to be matched as a convertible, or can it be matched a price equity investment? So really good question. No one has specified that. However, when we read the term sheet, it really indicates heavily that they're expecting it to be a matched convertible loan note. So again, it might be that when more information comes available, perhaps even the people running it have had a chance to think about that in a bit more detail and maybe become more flexible, because I've seen this asked a lot sort of in the reading materials around it as well. But no, at the moment, the terms indicate, without explicitly stating, that it will be matched by a convertible. Will there be personal guarantees, liabilities of directors on any of the scheme loans, in particular Bounce Back and Future Fund? So I will mention in relation to the Future Fund that we don't know. There isn't anything that it says about that at the moment. Off the top of my head, do I think there will be? No, I wouldn't have thought so, but can't say for sure. Sorry, hi Adam.
I was going to say, Sally, would it be quite unusual in your experience to see personal guarantees or liabilities for directors with convertible loan notes? Because from what I've seen, that the structure of the Future Fund convertible loan notes looks like it has been drafted by a group of experienced venture capitalist investors.
Yeah, I would say that it's not something I'm familiar with. Having said that, I will caveat that by saying that I'm a corporate lawyer first and foremost, rather than being a debt lawyer. So I'm coming at this more from the equity example, and I haven't been involved in lots of convertible debt instruments in my time. But at the moment, there's nothing to suggest that there'll be personal guarantees and liabilities of directors.
Okay. I think so. This question, I think we should ask to David as well. So about these government startup loans and also the bounce backs. So maybe Dave, we can come to you first. Dave, I know there are no personal guarantees with the startup loan scheme because it's the government, but perhaps you could explain a little bit if the loan, well, if things don't quite go to plan.
Sure, yeah, and I think maybe I'm jumping a bit with the question that asks about the bounce back loan, and it may well be that a startup loan is more appropriate for that particular business at pre-revenue stage.
Yes.
One of the things I want to get across is, although the amounts applicants can apply for are relatively small at 25,000 each, that is available to each director or partner up to a maximum of 4. So potentially a company with four directors could apply for £100,000. One of the other criteria to think about is, okay, if you're at pre-revenue stage, how are we going to pay the loan back? And with regards to the startup loan scheme, although there isn't a mechanism for the government, if you like, to pay it, unlike the other schemes we're talking about today, there is an option to discuss with the advisor about just paying the interest only costs for the first 3, 6, 9, 12 months, if that fits the business's profile better.
Thanks, Dave. Yeah, I think the government startup loan scheme isn't obviously a response to the COVID crisis, but it is a really good, and I don't think it is, there's too much, it's too well known by startups, especially at that pre-seed and seed stage, because it can be a good source of bridge funding if you think it's going to take longer to do a seed investment round, for example, or you do need to get some short-term cash in. So I think the government startup loan scheme is a good option, which should be considered by some early stage companies, as well as the bounce back loan, depending on qualification. Andrew,
there's a good on our website. We've got a story about a company who we engaged with, who got 2 directors got startup loans. They then got a small slug of equity. We did some trade finance. They then went and raised some more equity. They're now selling in nearly every Sainsbury's supermarket in the UK, but they started with a couple of small startup loans.
Yeah.
So it's a great solution for an early stage business. The only question that we ever seem to get is about the personal guarantee bit, and you're kind of going, well, who's starting to this? Of course, you've got to have some reputational risk because you're borrowing somebody's money, but it's 2 ways. When somebody's lending you the money under the startup loan scheme, they're checking you out. So their responsibility is to make sure that you're borrowing money responsibly and money's being lent responsibly. So there's 2 sides to it.
Yeah.
I'm just going to give a bit of an overview for everyone about what has happened with the whole bank lending, COVID, CBILS and everything like that, to try and get you to appreciate that normally when a bank launches a new product, it normally takes a year for that new product to be launched, for them to check everything out. These banks have been, we do
Andrew,
right.
I think we lost you there for a minute.
Banks, but they've been inordinate. The banks, despite the fact that everyone runs them down, have done a very good job with creating these new products. The problems that they've had is that their team outside the UK, many of them haven't been able to work. There's been massive backlogs with all the banks. So if anyone there has applied to their own bank and are getting frustrated, stick at it, but it's also worthwhile looking to see if other banks are going to be more suitable.
I think that's a good point and a good tip, especially if these bounce back loans are going to be open on Monday. There's going to be challenges and stresses put on the bank's processes and systems. So unless you really, really need it, perhaps you are better off just giving it a little bit of, you really need it straight away, perhaps giving it a little bit of time, let the bank's processes bed down a bit and then applying. We'll go back to the questions now. Lorcan, thank you for your question. It's a question for Sally on the Future Fund. Do you have to have raised money prior to the lockdown, or if you are in the process of raising right now, are you eligible?
So the details we have on this in terms of eligibility is that you raised at least £250,000 in aggregate from private third-party investors in the last 5 years. I would expect, if you're in the process of doing it now, it might depend on what part of the process, but I would have thought they want to know that it's happened in terms of meeting that eligibility criteria. That's a separate question to the matched funding that you need to have in place for the government to, grant money from the Future Fund. So I think there's 2 different things there, and I don't know if I've fully answered your question. So please shout if I haven't fully, but I think that explains what you're after. Thank
you, Sally. I think we've got a question here which we might have covered, but let's go to it anyway. A lot of startups are pre-revenue. If we funded the company through capital raising, do you think we would be viable for a bounce back loan? Andrew, am I correct in saying that bounce back loan is issued on a percentage of turnover, so pre-revenue? But Andrew's nodding away.
So I think
really you should be considering the startup loans. And yeah, Dave's nodding there.
Absolutely, that's what they're there for. They are the pre-seed, pre-start, pre-trading vehicle that seems to be most appropriate. Of course, each and every case on its own merits, but it does seem to fit that criteria, doesn't it?
Yeah, and there's an existing process which seems to work pretty quickly and efficiently, as opposed to the unknown.
I think one of the questions to ask yourself is, if you were the government, would you be lending money to this business? Does it seem a good idea for this company to have government's money at present? Are they deserving of it? And if you feel like you're deserving of it, you've got an argument. If not, not.
I think that's fair. Delia, thank you for your question. Can you apply for the Future Fund if you have already got CBILS or a bounce back loan? That's a very good question.
In terms of the Future Fund documentation, I don't know the answer to that. So I don't know if that's one that Andrew and Dave might have more thoughts on.
Sally, well fielded. I will also give a similar diplomatic answer. I would assume that there shouldn't be any problem if somebody's applied for CBILS or yet to start bounce back, they'd also be able to take advantage of the Future Fund. It would make logical sense, wouldn't it?
I will stick my neck out here in that I think there will be relatively few companies that would be eligible for the Future Fund and CBILS or bounce back. Primarily because certainly for CBILS, one of the core criteria is that you've got your EBITDA positive for the last for the 12 months ending 31st of December 2019. And most companies that have been raising investment are typically high growth technology, life science, or innovative businesses, and they have been loss making. So most businesses, it was more likely that it would be Future Fund or CBILS. But I agree, I think, with Sally and Andrew, there's no reason if you have a strong business which has raised capital and is now profitable that you could apply for both. I think we've answered Delia's second question. Pre-revenue business. I think you should be looking really at the government startup loan scheme. Dave King, thank you very much for your question. One for Sally. If we've already got a loan that not that has capacity within it, can the government in effect subscribe to the same note?
Hi, David. So I'd be pretty surprised if this is possible, whilst not being able to say that it's absolutely impossible, just because the term sheet that we've seen from the government on the Future Fund is pretty prescriptive. And I'd be surprised if the existing loan you've got capacity for matches up with the terms that the government are requiring. And again, it's not clear to us whether they'll be issuing perhaps completely prescriptive documents that need to be followed for this. So, or whether there'll be room for lawyers to draft up versions that that they'll cross-check against the list of terms. But I without being able to be definitive, I would be surprised if you were able to do that.
Thank you, Sally. One for Andrew here. Can you apply in reality for the CBILS loans and bounce back loans for banks that are not where you hold your current account? Gideon's business banks with HSBC, who are not who are quite conservative.
Okay, so the answer is yes. We're getting a lot of people who are getting in touch and saying, I have already applied for to my own bank. Why should I talk to you? And the answer is pretty simple. We're getting the intelligence on the turnaround time, the indicative rates, the types of business that they like from these banks.
Yeah.
So it might well be that whatever happens, you keep going with your own bank, but if you've got a need for money, our system will work out who else you should be talking to. And the worst case is that you've applied to your own bank, HSBC. We've got your terms with the co-op, and you're then able to pay the co-op terms against your own bank to see if you can get your own bank to consider a slightly better deal. We wouldn't earn anything from that, but we created lots of goodwill. Adam would think we were the best people on the planet. So would you. But it makes sense to look at more routes. The other thing is we're able to look at something and go, do you know what? You're never going to get any money that way, but we've done a bit of analysis for your business, and we can see we can look at X, Y, and Z for you. And there are always other routes. Unless it's somebody where you go, you can't get it that way, there aren't any other routes. Do you know what? You just got to get through this to the other side. You've got no other options. And that, again, is also useful because you then know there is nobody who's going to help you apart from yourself.
I think, Manu, it might be helpful. Sorry, Gideon's just sent a message saying, asking for Andrew to get in touch, and we'll definitely share details afterwards so people can get in touch with Andrew, David and Sally to ask further questions. Manu, perhaps you could also post in the chat the Ignition Swoop website, which you can, if there are people who want to discuss the loans further with Swoop, then you can register your details there, and one of the team from Swoop will get in touch with you. Great. So Matt Robinson, another question on CBILS. Is a company that hasn't been making profits unlikely to have an application approved? Andrew, the core criteria?
Right. Okay. I'm going to make a confession here. And Adam knows this. I've been down with, I had COVID myself. So my knowledge of the current criteria isn't as good as it should be because having been out and I'm not on the debt team. So that I'm going to put, I don't know to that. Yeah. Unless Adam knows the answer. But the team would be able to go, yep, can, can't, or whatever. And again, look at alternative solutions. Was that a good enough politician's answer? Could I get in the Tory government with that? Not answering the question at all?
I think that was a good swerve. Yeah. But good swerve by Swoop. Matt, the key figure that I understand for CBILS, and this is we've been making lots of inquiries with our bank, Santander, and also speaking with Andrew's colleagues at Swoop. The EBITDA for the 12 months ending 31st of December 2019 is the key figure that they're looking at for viability and also affordability. So they'll be looking at the repayments coverage for EBITDA. So if you were unprofitable for that period, it's going to be difficult. And I think it's likely that you'll be rejected for a CBILS scheme. So I would encourage you to look at either the bounce back, the startup loan scheme, or the future fund. I have heard of some businesses which have been profitable in 2018, 2017, likely to be profitable in 2020, but 2019 they invested for whatever reason they turned a loss. They have struggled at the moment, but I think it's worth persevering. It may be that some of the expenditure, for example, in 2019 could be classified as exceptional, or maybe it was capital. So perhaps reviewing it with an accountant would be a helpful thing to do to see if the EBITDA figures are actually a bit better than you might think.
Yeah, the other one for the business that's had a bit of a downturn is when if they were reviewed by our team, we would do things like, okay, we've seen your bank statements. We can see you've got an existing debt facility. Can that be refinanced? We can see that you've got some asset finance. Can that be refinanced? We can see that you've got an invoice finance provider. Can we get you a better deal? So you're not just looking at the immediate problems. You're trying to jump back and holistically look over the business to work out what there is that you can work with. And there's often another solution. And you then got to work out whether it's going to work for that particular business.
Thank you, Andrew. Right, we're getting quite a few questions in, so we'll try and pick up the pace because I know we want to try and answer as many questions as possible in the time. Joe has asked, how long will the future fund scheme be available for, and do you think the match funding would need to come on exactly the same terms as the government loan?
Hi, Joe. So initially, we've been told that the scheme will be open until September. but that this will be reviewed, as will the amount in the pot for the future fund. In terms of the terms being the same for the match funding, the term sheet talks a lot about equivalent match funding. So the sense is that it will certainly be similar. One thing I would say is that it could probably be worse for the non-government funding, but I'm not sure you'll be able to achieve that. But one thing that the term sheet makes clear in a number of places is that, for example, it talks about a minimum discount rate of 20%. And it says if you've agreed more than that with your match investors, the government get the sort of equivalent discount. So whatever is agreed with your matched investors isn't going to be able to be on better terms. There's also a most favored nation clause, which essentially says if you issue more convertible debt after you've benefited from the future fund and the future convertible is on better terms, then the government's terms have to be improved to that. So I think probably you can have the matched funding on worse terms, but not on better terms than the government.
Thank you, Sally. The next question is, if your revenues in Q1 have been severely impacted by COVID, but subsequently you have your best quarter to date, could this rule you out of the future fund? i.e., are there any criteria on how much your business needs to be impacted in order to qualify? There are, as far as I'm aware, there are no revenue based criteria for the future fund. It is, Sally's nodding away, so few. The core criteria is that you've raised £250,000 in equity financing previously. If you're the revenue, sorry, there are no revenue criteria for the CBILS. It's based on EBITDA for the 12 months ending 31st December 2019. General question though, in how much your business needs to be impacted in order to qualify, I think this has been removed, or this is not specified in any of the schemes actually. But Sally, Dave, or Andrew, put your hand up if you disagree on that point. Okay.
You're right.
Eamon Watson, thank you for your question. I presume a generic rate will be announced beyond the 12 months on the bounce back loan, as the government will be exposed on all companies that took out the bounce back loan and subsequently default. The suggestion is the rate will be 2.5%. Andrew, is this something you could comment on?
No idea yet. Okay. I can ask the woman I mentioned earlier, Kat Herbert, and she'll probably turn around and say, Andrew, my crystal balls, well, she hasn't got crystal balls, but don't know yet, no.
Okay, I think there's a lot more information to come out on the bounce back loan and also the future funds. Joanne, do you need a positive EBITDA for as at the December 2019 for the bounce back loan? I think the answer to that is no. Is that correct, Andrew?
Correct. Yeah.
It is looking. They will lend on a percentage of turnover basis, and some very straightforward eligibility and questions, which is meant to go live on Monday. Andrew.
2-page form.
2-page form. Question, Andrew, on the bounce back loan eligibility criteria. If a company has negative net assets, does it mean it was undertaking in difficulty? Which is, and he's right in saying this is quite a common situation for high growth startups. And Andrew, I'm happy to take this one if you're not sure.
Yeah, I'm going to anticipate what you're going to say, which is going to be a combination of we don't know yet and we don't know what the criteria is, but okay.
There is a bit of that. Andrew, I've seen two definitions of companies which are undertaking difficulty. So the net assets test, effectively, if your company has liabilities, gross liabilities, which are greater than your gross assets, then it would be classified as a company in difficulty. However, maybe not most, but a lot of startups actually aren't in that position because the funds that they've taken on so far have been capitalized. So they're not liabilities in equity. So they are in a net assets position. So they wouldn't be in that situation. This eligibility criteria actually exists in the EIS legislation, and the EIS scheme is widely open to most startups and scale-ups. So yes, we do need to look at the detail when it comes out on Monday, but we are touching wood that it will be the same as EIS, and therefore many startups will be eligible.
We've put what we've put on our website in a blog what we believe is going to be the definition. So if you go onto Swoop Funding, look in a blog, we're saying what we think the wording is going to be.
Thank you, Andrew. This is a question for David, I think. Dave, there's an entrepreneur here, director with less than 30% equity. Can they do the startup loan and SEIS?
Okay, it's a good question. I'll cover the startup loan part, and the short answer to that is no, because one of the eligibility criteria is that the applicants have to have controlling interest in the company, i.e. 50 or more percent of the voting rights. So either one individual or a group of individuals, if they've got over that 50% mark, then they are eligible to apply. It is worth pointing out, I suppose, with startup loans, there is a page on the website, Am I Eligible? So it will go through questions like this one, also the different sectors that wouldn't be able to apply, of which the most common one would be property.
Okay. And Dave, just to confirm that if it was, say, 4 directors with 30-10 percentage, would they be eligible for the startup loans under that, or would only if I guess more than 50% of the shareholders applied for it?
Yes, they would. I mean, whoever applies, so you poll together all their shares, and if the total is over 50%, then they're fine. So 4 directors who own all the shares, that's absolutely fine. In your instance, 2 of the guys who own 30% each, so that's over the 50% benchmark, they'd be okay.
Yep.
But 1 with 30 and 1 with 10, they wouldn't quite reach that 50% mark, so they wouldn't.
Okay.
And it's quite, it's one of those criteria that it's all about the voting rights as opposed to being a director. So ironically, someone wouldn't necessarily have to be a director of a company as long as they have those, that level of shareholdings, they'd be eligible to apply.
Okay. Thanks very much, Dave. The second part of your question, can a director who's got less than 30% qualify for SEIS? The short answer is it depends. If this person is already a director before investing, then unfortunately not. If they plan to invest and then become a director, then there are business angel rules, which in the EIS legislation, which mean they can qualify, and that's typically for non-executive directors. I think if you are a director and you're full-time in the business, the scheme is not really aimed at you. You may be able to qualify, but if you are effectively, if you are a founder, and lots of founders are also directors and have significant shareholdings, then you want to put money into the company, then we think you should be looking at putting in a director's loan rather than tying your money up in capital, even for the EIS benefits. But I'm very happy to pick that up separately with, you didn't leave your name, but if you'd like to speak after it. Mark Gamble, what is the time frame for the Future Fund loan for the expected conversion? And if there is no round to trigger the conversion, can I confirm that the payback is double the amount borrowed? Good question, because Sally, some of the terms for the Future Fund, they look to be quite investor friendly.
So Hi, Mark. So the term is 36 months, and you are absolutely right that the redemption premium is 100%. However, 36 months is a really long time for a convertible loan note term. So the intended outcome here is conversion, and the fact that it's 36 months is to give businesses a sort of good amount of time to make that happen. So in some ways, even though the 100% redemption premium seems harsh, the 36-month term is intended to even that out, on my understanding.
Thank you, Sally. Before we take one more question, I think we're going to have a second poll, which is the same question as before. We're just interested as to whether some of the knowledge and the insights which have been shared here have changed people's minds about which of, if any, of the loan schemes would be applicable. So perhaps if you wouldn't mind taking a second or two to answer this question, that'd be great. Okay. And we'll take a couple more questions, and then I'd be quite interested to see the results of the poll, Stu. Okay. Quick question from Anonymous. I had heard that the CBILS is now 100% backed by the government. Is that not the case, Andrew?
Up to the 250.
Yeah, I think that's correct. It's personal guarantees will apply above £250,000. And Delia, I heard that the Future Fund will be open from the 11th of May. Is that true?
I have not heard that, and I spotted that question a few moments ago, so I've had a quick Google, and I can't find anything that says that. So if you've got inside information for us, that is great. Please let us know your sources. But as far as I'm aware, we don't have a date for that.
Okay. Thank you, Stu, for putting up this was the results of the poll at the beginning of the webinar. Bounce back loans seems to have been the most popular, and also the Future Fund convertible loan note. With this is probably not too unexpected, but CBILS very, very distant. Probably because we have a lot of startups and scale-ups in our network, but also I imagine they've been put off by some of the stop-start and the stories in the press. Stu, I wonder if you could share the second one to see if there's been much of a change.
That is.
Sorry, that is the second one. Okay, very good. Okay, well, I think there's one final question, and then I think we'll wrap up. Oh, sorry, it's not a question. It's a comment from Delia. Okay, in which case, I'd like to say thank you very much to Andrew, Dave, and Sally. We will follow up with contact details for each of them, should you wish to speak with them. And what I will also say is, if you're not already, please sign up to our I Am a Founder newsletter, which you can find on our website, which is ignition.financial. We are, as soon as we hear more news on the Bounce Back Loan Scheme and the Future Fund Loan Scheme, and in fact any of the other schemes, we are updating our pages on our website, and we're also sending out updates via our newsletter. Next week, we are planning on, or we are going to host a webinar on what's next for venture capital and angel investment in post-coronavirus. And we've got a couple of venture capitalists and also an angel investor that are going to take part in that. It is a bank holiday next Friday, though, so we are going to confirm whether we do it on Thursday or whether we wait till the following week, but we will send out details, as always, in our newsletter. Thanks very much for joining, everyone. Have a good weekend. Bye.
Thanks, everyone.
Everybody,
Thanks, Adam.
enjoy your weekend. Bye-bye. Bye.
Bye. Bye.